right, everybody. Welcome. Thank you for joining us. This is the weekly Cyber Bulls podcast that we do, space that we do. I think we're going to have a wide-ranging conversation today, of course, about the stock, but also about the business. There's quite a number of news that just been coming out recently. We had the fire arson at Giga Berlin. We had potential kind of rumors again about Giga Thailand. There's that letter campaign that Alexandra and Amy and Kristen have been helping to promote to the Delaware Judge McCormick, and that's gone really, really well. In fact, gotten Elon Musk's reply to that. Also was even published on mainstream media today. So it's starting to make waves, and hopefully that might have some support. But it looks like the shareholders of Tesla has really come together. So, there is really something very special about Tesla shareholders. They've been through the thick and thin, and many of them still very much believe in the long-term view. How can you not, despite all the distractions? So let's talk about the stock and the business. If anybody wants to join us up here, you guys have questions, please raise your hand. We'll get them up here even sooner than we normally do. Why don't we get started with you, Jeff? Anything you want to talk about? The stock movement in the last several days. I know this is not something you'd like to discuss necessarily, but is there any topic that's grabbed your attention recently?
I mean, it's kind of an outsized move in the last, 2 days. I think I don't know if it's 10% or more in just 2 days. That's significant for a mega cap stock. So yeah, I think it is, I think there is you have a conversation hypothesis on what's happening. I think, there's concern. This is one of those things where if you think the Tesla story is just, how many cars they ship in a quarter, that's a certain investing or trading style that you may have where you're either trying to, swing trade it or, short-term trade it. If your horizon happens to be longer, then all of a sudden you start scooping into that horizon, what they're doing with their AI assets, what they're doing, both with FSD global expansion, eventually a robotaxi, but even FSD global expansion is going to be, hundreds of millions of dollars. It's already over $1 billion business. And then obviously then you have the compact car and the bot, so it depends how long your horizon is. I think the compact car, I think markets will front run that if it is ramping in the second half of 2025. But in terms of it like hitting the bottom line of the business, you're probably a couple quarters out after it starts ramping, into 2026. And while there may be some bot placements here or there next year, I think the production of that would probably be in stages over a couple of years. So what you're really looking at is right now, I think a lot of people aren't aware that Tesla is only, I think, in 22% of the countries right now from a distribution perspective. So this whole commentary of everybody who wanted an EV bought an EV, or the early adopters bought an EV, that's just not like based or in fact. When we were ramping smartphones both on the Android side and then the iOS side, there's 157 countries or so we were driving distribution in. It takes a while to figure all that out from a regulatory perspective. Infrastructure, in this case, the infrastructure needs to be charging. So anyway, I still think I think it's still the early days of EV. And I think that EV adoption curve is going to have, even if you look at it over the last 3 years, it hasn't been 70% every year for the last couple of years. And then intra-quarter, if you look at various quarters, there's quarters where it was much slower growth than others, and then all of a sudden, boom, it kind of spurts up and to the right. So yeah, I still think we're in the early days of EV, and Tesla is still a leader in that, both in units and in margin share. I think that's the most important thing. Like who ships this product and actually makes a bunch of money doing it, and Tesla's doing that. So in terms of current quarter, I'm sure there's going to be risk when you have a product like the Model 3 Highland, or the Model 3 in North America, US is 50,000 just in the US, not even including Canada. It's about 55,000 units a quarter. So if they struggle to get that ramped up, and let's say they do 10,000, pick a number, whatever you think the number is going to be, if they're 40K down on that in the US, that's going to cause a huge portion, of a gap near term. But again, I think it's all about your horizon. I think nobody should be trying to preach here, by the way, either about, it's, it's this and it's only this. You may be preaching to someone that's got a 5 or 10 year horizon, they don't care. Or you may be preaching to somebody that's got a 5 month horizon or a 5 week horizon, and they all have different aspirations and goals. So I would say if you have a very short horizon, I definitely think you're going to get a lot of headline risk over the next couple of weeks. In terms of things out there that could offset it, potentially could be any kind of partnership announcement. Whether it's a fleet announcement or whether it's an FSD announcement, or I think the supercharger announcements have kind of run their course. I do think you're going to get more of them globally. I think it's just the early innings of supercharger announcements too. But in terms of it, impacting the stock or impacting, I think it's you're going to get more announcements, but I think that's kind of already out there. So yeah, there could be upcoming announcements there. Nobody knows. It'd be pure speculation, but that's kind of how I'm thinking about it right now, Herbert.
Yeah, I like that because people say, well, you're just kind of hoping that there's going to be some announcement, but that's the thing about Tesla. It's an innovation company, and they are constantly making moves in so many parts of their business at this point that it is something that you can pretty well, count out. Every 6 months, there's always going to be some big announcement that happens. Partnerships are falling, and so it's not one of those things that it just out of the blue can happen. It's because of the movement that they keep making, that they're best in class and so forth. So, yeah. So, welcome, Christian. Tell us what you're thinking.
Yeah. Hey, Herbert, Jeff. No, I agree with a lot of Jeff's points. And if you listen to like our Cyber episodes, um, it just is what it is, right? Like, um, Tesla this year is just challenge. It's a challenge story. So I agree. If you're a long-term holder, 3, 5, 10 years, you don't care. You actually welcome lower prices if you have capital coming in, because then you could buy cheaper shares if you believe in the story long term. But I'm just framing it. We live in the reality, right? And the reality is we live today and next month. So I'm just looking at it on a 6 to 12 month basis when I talk. So it's just a challenge story. Units. I was thinking they're going to do 2 million. I don't know if they're even going to do 2 million units this year if they don't cut price, because the way it's trending Q1, and again, no one has a crystal ball, and this is not financial advice. I'm just speaking. I just look at the facts. I look at different accounts, and I just make up my own judgments. I think 450, could be the number, right? And we see China slowing a little bit. Their economy, it's not Tesla's fault. It's just their economy's in a bad place. So there's a little price war going on over there. So Tesla, just it's a big purchase cars, and it's just a challenged environment. Same thing in Europe. The U.S. is probably a little better with the tax credit, but U.S. is not trending great. So I agree with Jeff that EV is the future and it'll grow, but the facts are telling us that Tesla's growth is slowing tremendously, and it's not their fault, but it's just the fact. So if they grow, when they were growing 30, 40, 50, 60%, now maybe they grow 10 to 15% area. And this is with revenue barely growing year over year. And energy, I just looked before I got on the call, energy, which is a growing business, I think could be big in the next few years. But Q4, the energy energy storage was less than the last 2 or 3 quarters previous. So it almost like went backwards a little bit. So again, I'm not an expert, but I'm just looking at the numbers and they're just trending, they're just leveling, everything's leveling off. And then you go to earnings, right? And that's what drives stock price in a 3 or 6 or 9 month period. It's earnings. Are the earnings growing? And they're just not, right? Like we had $6 estimates not, maybe a year ago. Now, depending on how many units they do and if there's any more price cuts, maybe earnings is lower and it's in that 250 for the whole year. And then, at this valuation, you could have a huge PE on that with declining growth and earnings. So, long story short, Tesla's a great company. They are an innovation machine. They got a lot of things working like FSD and the bot. But I've always said this, that those things have to come along, and the car business, which is the primary business, we have to remember that as investors, that as much as we're excited about FSD and humanoid robots, these things could be possibly in years, not months. These are 2, maybe 3, 4 years out. So you need that core business to continue to grow, to fund those operations, and you need those core businesses to grow and continue to grow earnings in order to support the stock valuation if you don't want to collapse in the stock price if you're a big time holder of it. So they're just my initial comments. I welcome discussion, and I always love talking to you guys.
Okay. Yeah. Well, I mean, you say you call them facts, but they're not facts. When you say that these everything is slowing down, that's compared to the 50% growth. That's where the change is. But year-on-year growth is still very high for Tesla as opposed to other electric vehicles. The Tesla China, those are still like I'm digging through what AJ's saying. I'm digging through what Paulie is saying as well. And you got to remember that there's China New Year's that happened, and so at this point, it doesn't look like that it's fallen off the cliff or anything like that. So that's point number one, right? And your point about its earnings, this is certainly the theme that everybody believes in. But again, as investors in Tesla, it's basically what you look at. You got to look at the company in terms of its the energy growth. I just did a whole big show on that with Larry, and if he can join us shortly, he can explain to you how that's just exploding. And if you watch it, what it falls for 2 or 3 months compared to last quarter, it's already lumpy, but these are booked revenue, and Larry explains that it's actually 3 times the profit that's going to come in the next couple of years here. That's already booked. That's going to be coming soon too. So again, it's like you're watching things taking off, and yet you're looking at it in a negative way instead of looking at the business in a positive way, but the stock is not responding. In no way is a stock a reflection of the business, and everything in the business still moving forward. Maybe not as the growth, I give you that, in terms of what was expected with 50%, but we are in a massive kind of a downturn in the economy last year. That's now turning around, and I think that when the interest rates are truly cut, not just expected to be cut, but when they are truly cut, that's when we'll start seeing more sales and picking up. But electric vehicle sales is a done deal. There is no ifs, ands, or but that's happening. The incentives are kicking in, and you could just see what's happening. Now, you're right that there's deflation in China, and I don't know yet if that's affected the economy there, but we can watch that closely. Anybody else want to add to that? Jeff?
Yeah. I was going to say real quick, I appreciate those points, Herbert. I would just say I did some research into the new year real quick. And I think, yes, you're right. It moved into February, and I think last year was January. But if you take January and February and combine them for 24, and then you take January and February of 23, I think it was still a good middle to high teen reduction in units over that time period. But good points.
Yeah, no, I keep getting conflicting information. I thought, it wasn't big growth. I thought it's like 8% ahead, but whatever. It's not 20. It's not 30. I don't know why there would be conflicting data. I know the number just came in last night. But yeah, no, I think that's right. I think it's you have the business and you have the stock price, but the current business EPS is the current business, and the question is current business versus future business, and what's the probability of future business coming in. And then the other thing I'll say is that there have been surprises along the way too. I respect the people that count cars and track units and what they try to do, and I have no issue with them trying to do that. It's just very difficult to do from the outside, and sometimes there's variability as new factories are ramping and so forth. So there was a quarter last year where the min max was 40 to 50,000 unit change within a quarter. So I don't know. I don't know what's going on. Tesla hasn't come clear with the Model 3 refresh in terms of, is there a problem, and what is that problem? They pushed the. I just looked today. If you ordered a long range, it's in May, and if you order a rear wheel drive, it's March, which leads me to believe that maybe this is a battery issue. Maybe they're allocating to where the rear wheel drive uses LFP, and they've got plenty of those. So it's just strange that I can go in and order a Model 3 Highland today rear wheel drive, which is LFP, and get it this month. So maybe there's a battery constraint that they're dealing with. So yeah, anyway, if it's my whole take is, if it's a supply constraint, and if Tesla clearly articulates like, hey, we launched this new vehicle, we have demand, normally we ship about 50,000 units in the US, and we ran into an issue with supply, but we're going to clear it up in April, May, then the market may look past it. But if they don't say anything, if they have a difficult conference call where they don't answer those kind of questions, then I think they'll get punished for a shortfall. But again, the 2 points I want to make is like these numbers do tend to move around, and they've been like way off at times before too. So this is not an easy thing to do or forecast. But if you go, I think the other key point is just if you go beyond this quarter and this year, Tesla will continue to be a leader in EV and EV margin. It looks like BYD is entering into some of the the pricing wars, so their margins are going to they'll be under stress as well. And it'll be interesting to see what they can do in this quarter. Tesla's ramping the Cybertruck. Cybertruck's being received very well. Model 3 Highlands. So they've got like they don't have the issue of like I don't have good products. I think the issue is they need a product at that Model 2 compact price point to drive volume, and they're not there yet. And they need to get the Highland and the Cybertruck to scale. If the Cybertruck and Highland were to scale, I actually don't think we would be talking about too much of an issue this quarter. Even if the Cybertruck could get to 10 or 20,000 units, I don't think you would be having too big of a discussion this quarter on it. So I think those are the things. And if the market can kind of look at that and say, all right, they have good products. The people want these products. They're in high demand. They have long waiting lists, and we've just got to go fulfill that demand. Maybe there's a story. But in the end, they've got to show how they're going to steady gross margins and grow EPS. And if it's if that's in the near term, and then you start sweeping in next year, and then you start looking at the products for next year, it's exciting. And then the other thing, and Herbert mentioned this too, and it's really no one's really factoring this in, but we don't know when the Fed is going to start cutting. It's in the second half of the year, and we know autos are an interest rate sensitive category. Macro auto is flat in the United States this year. Meaning that ICE plus hybrid is actually going to have negative growth this year. That's the plan that's being forecasted by the major companies like Cox Automotive and so forth. So EV is going to grow. Some have estimates of 20%. Some have estimates higher than that. But EV overall should continue growing. But ICE plus hybrids is actually negative. So the overall SAR, or the retail component in the U.S., is going to be predicted to be flat this year. So interest rates are probably having an impact on that. You don't normally have that, from an auto SAR perspective. So we'll see. And we've also hit kind of peak auto too. Peak auto was probably 2017 to 2019 in many jurisdictions. So those are, I think, all the challenges being dealt with. But I don't think what most don't have factored in is like, what if there are rate cuts? What if they're sooner? What's the impact on the consumer? And does that start bringing people back into buying vehicles and reaccelerate the growth curve. And then Tesla has the new products that are ramping now that will help them with the growth curve. In the past, in other industries, when your growth is starting to kind of stall, you definitely need an injection of new products. That's usually the recipe to drive it higher. If you don't have those external factors. And then the other thing is obviously after the Cybertruck and the Highland, they've got the compact vehicle the following year. So there's definite things on the horizon for Tesla.
Welcome, Larry. You want to join in?
Hey, yeah, I'd love to join in. So I want to start by just talking about the energy. Somebody mentioned a little bit earlier that energy was flat, and it was anything but flat. 2022 energy gigawatt hours delivered was 6.5. 2023 was 14.7. That is more than a doubling. So that's not flat. Revenue, though, was only a 50% increase, 4 billion to 6 billion. Still not flat, just 50% growth. Gross profit rose from 288,000 to 1,141,000, which is, almost a fourfold increase of gross profit, and the gross margin rose from 17 to 19%. So I have no idea how you can call that flat, other than it evened out over the 4 quarters, because the nature of the energy business is they're delivering very large projects piecemeal, and so that's the reason why the quarter to quarter revenue appears to be flat. Believe me, it's not going to be flat in 2024. It's probably going to double again. But here's the most important news of all. The 19% gross margin we earned on energy, the 1,141,000, was completely overshadowed by a $3.8 billion revenue reserve, or reserve put against revenue, due to what they call a performance reserve, 3.430 million. So in other words, the real revenue, when fully realized for the 2023 year, was not 6 million, it was 9.47 million. And the gross profit was not 1.14, it was 4.5 million. A billion, these are billions. In other words, the reserve is built up because the contract provides, I presume, for a payment over time based upon performance. And Tesla, in the early contracts of the last 2 years, the small contracts of last 2 years, are fully earning those performances. So what we see is that in 2024, earnings are going to be boosted by, while they're putting aside this reserve for the following, for the contracts that they do deliver, they'll be earning back the reserve from the contracts of this year. The net of that is that we're going to see a very significant climb, both in revenue and in profit margin. And that's already baked in before we even begin. So, you know, if you look behind the numbers that we simply quote directly from the 10K, and you look into the notes of the 10K and see the reserves being held against that revenue, you realize that the 6 billion revenue in 2023 compared to the 4 billion revenue in 2022, which had almost no reserves against it, by the way. So the raw increase from 4 billion to 6 billion really represents an increase from a $4 billion business to a $9.5 billion business, excuse me, which is, you know, a very significant increase. And if I'm right, then 2024, the revenue is going to be in the order, the gross revenue is going to be in the order of $15.4 billion. And the net revenue on that is going to be $11.49 million. And these are contracts which have already been signed. And so what we're talking about is almost a doubling last year and almost a doubling this year. So I don't see a lack of growth in the energy business. I think, you know, I'm amazed at the growth of the energy business, and it's about to explode. Anyway, that's my view.
Hey, Larry, could you put some, thanks for going through that. You know, can you put, I mean, in context, the auto business right now is around 100 billion revenue run rate.
Yeah.
So what do you think that energy needs to go to before it starts making a dent and it gets properly picked up by analysts? And does it have to get to 20-30% of auto?
Well, I'm projecting a revenue in 2024, 15 odd billion reported, and 25 billion in 2025. I think that's when we start getting some attention. And that 25 billion is based only upon the Lathrop and Shanghai coming on stream. So I think we'll get some attention. But, you know, when we talk about a gross profit of about 7 billion for the year in 2025, I think we'll get some notice, particularly if we properly disclose the reserves against that, because at that point there'll be a reserve of about 13 billion. It's a very profitable business, but it's going to take time to see those profits work through. The other thing is that as long as Shanghai gets built by the end of this year or early next year and can deliver 15 gigawatt hours next year, which I think is pretty reasonable assumption, then we'll see these numbers. And then it depends upon a project being planned in the coming year for implementation in 2026. So I think that by 2026, we're going to definitely see some real big numbers. And by the way, I'm being very conservative because I'm not sure all contracts going forward into the future are going to require this level of reserve. It seems that this may have been particular to two very, very large contracts.
Right. So it seems like it's going to align in terms of its growth and hitting the bottom line. It's going to be closer to the compact vehicle and kind of this collision of things that could be happening. Could be FSD.
Yeah.
It could be a number of different things kind of all happening. So it's like it's another thing that's on the horizon to kind of like expand the size of Tesla's business.
You're exactly right. I mean, I see, revenue, in the 3 billion range in the 2028 timeframe hitting the bottom line, and that's kind of beginning to really make a dent. But the other thing is that there is a real opportunity to speed this up, and I'm taking a pretty conservative view of it, really based upon the availability of batteries. Batteries are going to be the principal problem here, not customers, because the actual backlog is incredibly large. It's an amazing backlog. When I looked at the backlog, I couldn't believe my eyes. And so it's possible that Tesla may speed up, the implementation of factories larger and enlarge, both Shanghai and Lathrop. Also, I'm not sure what they plan in Nevada, but there is talk about mega packs coming out of Nevada as well.
So I've got a way to frame all this, and I want to get all three of you guys to answer this question. So let's talk probabilities, right? Let's talk about the probability of what we think is going to happen to, let's start with the auto business this year, okay? And the probability of what will happen to the auto business in the next 3 to 5 years. And then let's do that same thing for energy, for FSD, and for bots. And let's not even count all the other things, okay? So I will say that, Christian said that he thinks that the car business might be less than 2 million cars this year. What's the probability that it'll be less than 2 million, and what is it above 2 million? I'll ask you guys that question. But then I want you to also give me, what's the probability that the bot business will, let's say it will work. It will work and it'll be successful versus it will just die and it's just a pie in the sky and it'll never be sold, right? Black and white. Let's do the same thing with FSD. Let's do the same thing with energy, which is already a business today. Okay. Why don't we start with you, Christian? Let's hear your answers to each of those first. So you think that it's going to be less than 2 million cars this year. What probability do you give it that it's less than 2 million?
Yeah, no, great questions, Herbert. And you might have to remind me of the third one. So on the cars, again, this is just my opinion. I think it's 50-50.
Okay.
So I think it's 50-50. Unless they cut price a lot and then maybe they can grow some volumes. So, but yeah, I would say 50-50 on that.
Okay. What's the probability that FSD is actually better? FSD 12 is good enough to be level 3, that the take rate of FSD, just FSD, not robotaxi, is going to rise from 10%, 14%, where it's now to, let's say, 30% in the next several years and even higher. What's the probability? Do you give
so again, I give that
something.
Yeah, I would say maybe a 25% probability of, increasing take rates, significant, just because, again, just my opinion, I've watched a lot of the videos, I've watched V12, it is much better, and a lot of people say it's much better, but there are also some regressions. So sure. I've heard conflicting things. So I'm still not sold that this is like a 1 or 2 year story. I still think it's a little further out.
Yeah,
Can people enjoy it? But yeah, I think it's a 25% chance that something significant.
Success. Okay, that's fair. And then what about bots? What's the likelihood in 3 to 5 years it's an actual product being sold?
In 3 to 5 years, I'm more confident about that. In 3 to 5 years, that a bot could be useful and sold to entities. I would go 60 to 80%.
Okay. And then energy, which is existing today, dude. Tell me what your thinking is of where it will be 3 to 5 years from now.
So I agree. People are going to battery storage, and I think Larry made great points. I think it's growing. I think it will grow more. What's the percentage of what? That it'll be like a percentage of the business?
Yeah. Yeah,
okay.
There's some estimates that maybe.
Well, Elon has said that he thinks the energy business eventually will grow. So I'll say over the next couple of years, I do think with the car business slowing and 2026 before we see compact essentially ramping, I do think energy can make a huge progress on the total revenue. So I would say in 2 years, I think energy could approach I don't know, maybe 20 to 25% of revenue, of total revenue.
Yeah. So what you do is you take these probabilities and everything you just said, right? And then you calculate what it's going to be. And then you do kind of like a regression and you figure out what the actual value is today. So it's a lot more than just the auto today, right? You know what I mean? So you have to consider that. So let's go
Yeah,
through the
I
10
agree.
questions with you, Jeff. What's the probability it'll be 2 million cars above or below?
Yeah, I'd say it's a coin flip, probably 50-50, maybe 60-40. It's right in that area.
Okay. And then do the same thing for the other three businesses, FSD, bots, and energy.
Yeah, and the question on FSD is like, does it go global, or does it
I think
you
I
know,
said 20, let's say I think I said 30% take rate of FSD only, not robotaxi, that increased their take rate to 30%.
and the probability that
3
happens
to
this
5
year?
years. 3 to 5
Oh,
years.
oh yeah, easily like north of 80%.
Okay. And then energy.
Yeah, I mean, Larry went through the numbers really very eloquently. I think it's going to be a meaningful impact, probably in 2026. But, I think markets front run some of that information if they're smart. So,
That's my point. Yeah.
yeah, they may get ahead of that in next year.
That's my point. And then what about bots? What's your thinking? Is that a dud? Possibility it could be a dud. Absolutely, there's a possibility. But what's the possibility that it'll be a product in 3 to 5 years?
100% it's going to be a product. It's a question of to what capability and scale. But I think Tesla is in the best position of any company to make it a product and to make it scale.
Okay, great. And then Larry, can you answer the same questions?
Yeah. So I would say that it's 50-50 as to whether they exceed 2 million. Had a bad start to the year, so that kind of counts. That counts against them. What's the second question?
Energy, that in 3 to 5 years.
Oh yeah, I think they'll hit 3 to 5 years. Wow.
Yeah.
I think that gross profit will be about. I think gross profit would be about 40% of auto gross profit in 2028, and will exceed auto by 2030.
Yes. And then bots, what's the likelihood bots will be a product by 3 to 5 years from now? Sold in significant numbers.
100%. I don't see any reason why it would not be.
Okay.
Yeah.
And then FSD, take rate 30% and above 3 to 5 years from now.
Yeah. So I've studied the FSD stuff very carefully, and I've spoken to people who know a lot about it, and I'm very confident that the company will declare it to be out of beta by the end of this year. And then it's regulatory only. Then it's a matter of regulatory. So I think we'll start earning real dollars against it in much larger quantity by the end of the year. And I think we'll get regulatory approval in multiple municipal environments early next year.
Okay, so there you go. So I guess my point was simply that if your thinking is that the probability of bot, energy, and FSD is 0, then you're looking at the car business today and you're calculating earnings for this year and you're giving a stock value of what you think is fair. It's probably less than $200. And you're going, okay, the business is falling. It's not the 50% growth anymore. This is a car business. This is what the stock is fair. But because you actually did, Christian, actually give probability for all these other bots, and you give a higher probability for the bot, now you go and calculate what you think it will be in 3 to 5 years, and High Energy is an existing business that's existing selling today, and it's growing with actual megapack factories being built and probably another one announced this year. There's a very high likelihood that they're going to continue that business, and it's not a dud because it's already proven, right? You need to give discounted cash flow for future earnings and bring it down to the stock price today. And if it isn't reflecting the stock price, which is what's happening now, then there's an opportunity here. So I just wanted to frame it in that way. Am I wrong in the way I'm thinking about this?
No, I think you're right, Herbert, in the way you're thinking about it, and especially if you frame it in a 3 to 5 year horizon.
Yeah.
I think just my earlier comments again, I'm just kind of dealing it with like where are we today, and then looking out, in a reasonable amount of time. Like if I look out to 2030, I'm not smart enough to know exactly what 2030 looks like, but I know it could be great things. But I'm also looking at the next, 6, 12, 24 months, and I'm trying to see where Tesla business is. And as exciting as humanoid is, I don't know if it's going to actually bring $1 of revenue to the business. As exciting as FSD is, I'm not smart enough, maybe some other people are, that I can't really quantify exactly, it's like a call option, like how much revenue is going to be different from today. So I'm just trying to look at what the business is today, what we could see today, feel and touch. And I'm trying to extrapolate out a little bit and say, okay, what's it look like in 12 months? And all I'm saying is if it deteriorates enough where even though you have these great things happening in the background, the market for me is going to look at what they can see right in front of them. And what's right in front of them, if it's starting to go really bad, that could reflect in valuation. So I'm also trying to put a stock market lens on it and also talking about the business. So it's a great discussion. And I love hearing from Larry and Jeff, and we're just giving our opinion. So I agree with you. Long term, Tesla could be a great play. But when I do it, I'm also thinking about other investments in a 1 to 2 year horizon. Like, is Tesla the best investment in a 1 year horizon? Like Jeff was saying, and this is not financial advice, is Tesla a better investment when I'm thinking about a 5 year or a 10 year horizon? So I'm trying to put all those things together, but in the short to medium term, so I'm saying like in the next 3 to 12, maybe even 18 months, to me Tesla is just in a very challenged environment.
Yeah. Okay. Well, that's fair. That's the difference between a trader and an investor who's looking longer than just 6 months to a year. But what I was just what I just walked you through was even if you were looking at the stock price today, you realize that these things should be discounted cash flow now, particularly energy, and it's not being done today. So, but your point being that the stock, you're looking at the stock, I'm looking at the business. That's the difference, right? So I don't care what the stock does. When a comment that you make and others have made, and it's just I still can't understand. They go, the stock market never lies. The stock market's telling you something. I get what you're saying. I understand. I'm not dumb. I know what you mean by that. But I still shake my head. And I'm saying to you that the stock market is always wrong. It is not right. It's always wrong. And you have to know you're looking for opportunities when the stock market is wrong. When it's
Yeah,
actually
absolutely.
not reflective of what's happening, you got to understand that's not right all the time, right?
No, 100%, Herman. I totally get what you're saying. But to be fair, I am also I have to look at stock prices because I have to. Like, I got to see like that, and also I'm looking at the business too, though. So I'm just making an assumption, and what I've been assuming over the last 12 months, has been right. So you could say, well, just be a long-term investor and just sit there and wait. That's fine if that's your approach, and that's great. But what I'm also saying is there's value in commentary at looking over 6 to 12 months. If you could kind of spot opportunities that are moving and some that maybe it's going to take time for them to move. So I think you can look at the price action and kind of make some determinants around that. But I agree with you. If you're looking at Tesla long term, you would want the price to come in more and more and more and more, so you could accumulate shares for the next 3 to 5 years. But at the same time, people that say, I would love to catch Tesla under 150, under 100, and they got massive positions on. I also think that's foolish too. Like, you don't want your stock price collapsing 50, 60, 70% when you've got a majority. A lot of all investors of Tesla are here. When you've got a majority of your capital already in, any more money that you could maybe put in is maybe a peanut, and you're drawing down. You're like, oh, I could buy it cheaper when you're drawing down so much. So I just think that's I'm not saying that's everyone, but some people are welcoming these massive discounts to the stock price, and I think also that is foolish.
Well, I don't know about that. I mean, if I could put in a word, I'm a buyer of dips in Tesla. I mean, I have accumulated Tesla very strategically. They're not my only stock, but they are a very, very significant part of my portfolio. And my portfolio of risk assets is relatively small to my total asset base. But what's happened, and that's calculated at cost. I don't calculate it at fair market value. As long as fair market value is higher than cost. I do write it down, though. So I'm accumulating Tesla whenever it really dips below a certain number. I don't want to disclose the number right here, but if it goes much further down, I will be accumulating again. And I think that's a strategy that's that's been extremely good for me. Extremely good for me. I mean, there was a time when I had, a dozen different names. I have far fewer names now. I only have actually 5 names now. A much smaller number of names. But so I do accumulate, and the one stock that I'm accumulating at a fairly rapid rate, or a fairly fair rate right now, is Tesla, and I have a certain target to accumulate them. So, and I think that's a good strategy. So I get dollar cost averaging over time. I don't dollar cost average month by month. I dollar cost average dip by dip. Because my experience with Tesla is that I don't know whether it's 25 or late 24 or 25 or 26, but there's going to be a moment where the stock moves into a new realm and it's not going to come back. And all those guys who are talking, the traders who are talking exactly the way you're using exactly the phrases that you're using, will all be bad mouthing, Tesla and saying, it's now too expensive, now it's too expensive. And that's exactly what happened to NVIDIA for those guys who didn't have the courage of NVIDIA. So all I can say is that these are very good times for me, and this is not investment advice, but these are very good times for me from the perspective of my Tesla strategy. And it's exactly the opposite of yours.
Absolutely, Larry, and I appreciate that, and I think that could be a great strategy, and it was a great strategy. But it's also the stock's been flat for 3 years. So if you're holding Tesla, there's opportunity costs. You have other stocks that like Nvidia, since you mentioned it, that at the beginning of the year, I know it's a short term, but you're like up 70-80% Nvidia from year to date, and Tesla's down 30%. So if you had $1 million, in a retirement account, you would have, closer to 2 million with Nvidia in like 3 months, and with Tesla, your million is like 700,000. So I know it's a short time period, but we could play that game both ways.
Yeah,
like you're drawing down 50-55% in Tesla, and you're getting smashed.
You
and
can't do that,
the market, the S&P's up 40-50%. So I think regular people that have.
Wait a minute. Let me take.
Larry, let me just finish, and then you can retort. There's a lot of people with regular retirement accounts that aren't, super rich and have multi-millions. Just, if they're all in Tesla, it could be a dangerous strategy if it doesn't pay off. So it's not financial advice, but I'm also giving some general practical advice that, we don't know the future, and sometimes it's okay to play it a little different than we all think in the community.
Okay, sorry. Go ahead, Larry. You want to reply to him first?
Yeah. All I want to remind him is that in 2012 to 2018, this is exactly what I was told. Exactly what I was told. But when that stock did move in 2018 and 2019, 2020, that was it. And so all the money so I had some of the names that you mentioned. I had Amazon was my big name, but I had also NVIDIA at that time. I had Google at that time. I had, some really good names, different names to what they are now, but some other good names. But it was really Tesla that had really been the dog in my portfolio that completely outshone them all. All I'm saying is that my confidence is that Tesla is worth many times its current value, and I have the confidence in the stock that I'm prepared to take the knock on the one shining choice, which is NVIDIA, or the 2 or 3 shining choices that may be NVIDIA, Microsoft, and, I don't know, some other AI darling, and sacrifice that, and so I think that's a fair point you make. But if I had a portfolio that I was, accumulating stock at, one of the counters I would definitely have at this point is Tesla, and I would be accumulating with dollar cost averaging.
So Christian, you can't go and say, well, if you had invested in Nvidia, for example, and it went up 20,000 times, you can't pick and choose, right? Because 3 years ago, you yourself wouldn't have known to pick Nvidia per se. I mean, maybe, you know what I mean? Like, it's like you don't know which stock was going to go up and down. So that's just step one. You can't say, well, if you had done this, you would have now done 3 times. Was that smart to do that instead of waiting 3 years? But the other point I just want to clarify to folks is that I think it's absolutely wrong to go all in one stock It's also wrong on the other side, which is what I think I'm hearing you say, which is to have zero Tesla. There's probably a certain amount of Tesla you should have, despite the fact that in your view it's going to be a dog in the next 3 to 6 months to a year. Precisely what we were talking about earlier. At the end of the day, it's a strong company. It's a strong company in massive markets that's going to continue to grow, that it's going to have innovation that is winning. These products are the best in the market. It's one of those, that's how I decide. And whether or not the stock goes up or not, I don't know, but I'm basing it on probabilities, right? So I think if you're saying, Tesla's such a dog, you should not buy it, here's why, which is what I hear when you talk. And I'm sure when you hear me talk, you think Tesla's the only stock that you should buy, and that's the only one that's going to grow. That's not at all correct. You should have multiple amounts, and you can have a certain percentage that you're playing, and you're playing around with, risky stocks and risky gambles. And then there's a certain amount you're playing around multiple stocks. Absolutely, you should be doing that. But it's like to say that, I'm not going to be in Tesla at all until next year. That's a different conversation, right?
Yeah. And Herbert, let me clarify, because I don't think I said Tesla was a dog. I'm not saying anything like that. I think it's a great company. All I said was the stock could be challenged over the next 6, 12, 24 months. That's all I said. So it's coming off as negative. I'm just stating the reality. I respect Larry a lot. I respect Jeff. I respect you. We're just having a conversation. I'm just giving a point of view. My point of view over the last 6 to 12 months has been correct. So you could say, well, it's a great point of view, but you should be buying Tesla and just dollar cost average down and down and down. That's fine. All I'm making a broader point is everyone's different. So I'm not giving financial advice. What I'm saying is there are some just regular people. So know who you are, know what kind of risk tolerance you have, know what kind of time frame you have, and what kind of wealth you have, right? Because all I'm saying is over the last 3 years, if you just take the S&P 500, of course, Larry's right. Tesla could make its move and do another 20x in 2025. I get it. I don't know that that's going to happen, and I can't say it's not going to happen. What I'm saying is, over the last 3 years, if you were just in a simple index fund like an S&P, you're up 40-50%, and Tesla's flat. So what I'm just saying is, just keep that in mind when you're an investor and you're listening to us speak about it. That's all. Because I also like to, I was a financial advisor in a former life, and I like to just give some practical things rather than just, talk about things, all the upside, and, wait till your retirement 20Xs and things of that nature. I'm just trying to be realistic about it. That's all. I respect everyone.
And they're different. They're different strategies. While we were talking, I pulled up my 2015 to 2018 portfolio. Here are the names: Amazon.com, Activision Blizzard, Alibaba Group, Bluebird Bio, BFI Holdings, Walt Disney, Alphabet, Mercado Libre, Netflix, Nvidia, Okta, and Tesla. So every one of these stocks, well, there are one or two does that I think I sold in 2019 or 2018, late 2018. But every one of these stocks did really well, and this portfolio did extremely well. Tesla blitzed the lot. It blitzed the lot. And, and I got to a point where Tesla value was so high, I had to decide, do I sell Tesla or do I sell some of these other stocks? And after 20 years of holding, I sold Amazon. And actually Activision, well, a few of them. Anyway, bottom line is, all I'm trying to say is that, Tesla is for me, it's an important component of my strategy.
Yeah, the other thing is it's tricky too. I just don't know how to. I just don't know. I wouldn't know how to do it in terms of like getting all in or all out, because I keep going back the last year, and between May and July, Tesla went from 150 to 300.
Yeah.
And quite frankly, there was no economics around the supercharger deal that said the company should double. There was no economics offered by the company that said the stock should double. And nor, I mean, it got some decent press, but it was kind of suppressed in many respects. So I don't think any of us know why that happened, because the EPS was flat to declining. And it declined 22 to 23. It declined throughout 23, and you had that doubling. So like there are periods in time of owning Tesla where you have a long horizon, or even some short horizons, where if the business versus the stock can be pretty erratic, as that example showed. I wouldn't have known till I wouldn't have known to like, if I saw the stock trading down to 60 something, 150. I mean, I was adding, but I wouldn't have known to like, like that's the point. There was no, because it was at 100 earlier in the year. So there was all this fear and about it doing it again. The other thing that happened at that quarter was the people who count cars started the quarter with a very low number. And I don't know if that was part of that was bringing the stock down or not, but the people who count cars had a very low estimate. And I think it was one of the worst quarters in terms of estimating deliveries. I think many were off by like 4%. And it literally, the estimates, they delivered like 466,000 cars, I think, something on that order. And the estimates were in the 440s. And then people were starting the quarter at like 420 something.
Right.
And even in the middle of the quarter, they were very low. So there's a lot of like moving parts out there. So it's a difficult thing to say. But I mean, there are data points that say this year that there's a greater weight of negative headlines in press if your horizon is only this year versus 2 years. I don't know when the markets, by the way, maybe it's a good question, Herbert. I don't know when market makers and analysts automatically start flipping and looking to 2025. I don't know when that happens. Dan Ives was saying that that's kind of after the springtime they start doing that, because I don't know how long we're going to be like sulking over 2024. Because I think we're going to get challenge print after challenge print. Maybe we'll get some surprises, here or there. Maybe there'll be partnership announced. But I also think that, at some point they start looking ahead. You stop talking about the current year, you start looking ahead. So anyway, bottom line is I would have never been able to call a 2-month doubling of the stock last year, just looking back. And that's why I stay in the stock, and if I trade a very small percentage of the position around it. But that's just my strategy. Yeah. And that's the other point. Everybody should have their own like strategy that works for them, that works for their time horizon, that works for their own risk tolerance. There's not one thing here we can tell you that that may work for you.
Yeah.
Yeah, 100%, Jeff, and you're 100% right. No one knows, but again, you can make some calculated. So what I would say is, when Tesla, when it went all the way down to 100, remember that was almost an 80% drawdown. That is a major drawdown. So when you got relief, and when Elon said, he's like, everything was just piling on, and the thing just went, kaput. And then it rallied with the AI boom and everything, and they were going to sell their cars, and Elon gave good guidance. He got on the call and he sounded confident. And then you had the supercharger. I agree. I think the market didn't realize that there would be no economic value. They're just saying, oh, Tesla's won. So the narrative became Tesla's everyone using their supercharger. They own all that. And then you just get the piling on. And I think, again, this is all in hindsight. I'm just trying to give some rationale around it. And I think now, as we entered, at the end of last year into this year, what's coming into more focus is the call with no, guidance on growth. Like, are they going to grow? Like, are they going to grow 10%? Are they going to grow 20%? Are they going to go flat? Is Elon going to keep cutting prices? Is margin stabilized? I know these are all boring things when you think of all the other stuff, but that's the only thing investors can touch. I agree that valuation is more than that. I think some of it's about, remember, Tesla is not a 50 billion market cap. It was a 700 billion. It was a 1.2 trillion at one point. So I think some of that's in there. But the main driver of the day-to-day of the business, and where most of the revenue is coming from, is cars. And if you have a car business that is slowing, where it was 50% growth compounded per the company, I don't know how we're getting to 20 million vehicles in 2030 unless that compact comes real quick, because we're struggling now. We're going from, say, 1.8, maybe we get to 2, and then since 26 is where the real volumes come in, is the compact in 26. Next year, what do we go from 2 to what? I don't know, 2.5. So now we're in 25, where there's a lot of people in the community, and I'm not naming names, I'm just saying they had 5 million, 6 million. That was like considered absolutely. Tesla's going to do gigafactory here. They're going to have 3 or 4 more. They're going to be popping out, and it just didn't happen. Growth has slowed. Elon has pulled everything back in. And we're still trying to ramp Berlin. We're still trying to ramp Austin. We're nowhere near capacities in those factories. And so I think, growth is challenged. And I think the market's just looking at it and saying, well, we're not sure about FSD. We're not sure about how long humanoid's going to take. And it's re-rating back into more of a hardware car company. And I think that's why the valuation's coming in. This is just what I'm guessing from what I'm seeing from the market action. But to Herbert's earlier point, and to your point, and to Jeff's point and Larry's point, no one knows. I don't know. You don't know. No one knows. All we know is what we see in front of us, the price action, and what Tesla management is telling us about the business. And what Elon guided for on the conference call wasn't that inspiring, and it didn't sound like a lot of growth was coming in 2024.
You're exactly right. You're exactly right. Elon didn't give us guidance, and everybody's kind of lost confidence in the growth story in the car company, and that's what if you do not have confidence in the Tesla vehicle business, then you probably are not a buyer of the stock. If you believe that the company is going to dominate in that business and is going to achieve some of these other goals, then you're a buyer of the stock, and that's all there is to it. You either believe or you don't believe. But I mean, that's true of all these companies. Every company has got a story, and you either, you look at the story, you look at the management, you look at their track record, you look at everything there is about it, and you get a sense, is this something I buy or is this not something I buy?
I agree with you 100%, Larry. What else you got, Herbert?
Well, let's invite up some folks here. So we've got Gazep. Do you want to join in? Okay. Did you guys hear about the news then? What you're thinking about the arson fire, Giga Berlin, the potential for a Giga Thailand? Is there any thoughts on that?
Well, the Giga, I don't know. I mean, again, I'm just looking at what I hear, and then I'm just trying to put reasonable, logical things to it. We've heard about Giga Indonesia. We've heard about a Giga India. We've heard about now Giga Thailand. We've heard about maybe a Giga Italy. I can't put much weight into it, Herbert, just because every other day, every other week, we have a new possible gigafactory going there. So as far as I'm concerned, I think one of these or two of these things might hit over the next bit of time, but I can't put much credence in the report. You just have to wait until something's announced. We still even haven't put a shovel in Giga Mexico yet, and that was announced, I don't even know, 6 months ago, a year ago, and we haven't even started constructing it yet. So let's get a shovel into Mexico before we worry about Giga Thailand.
I don't think that was the question.
Yeah, nobody's worrying about it. Basically,
Well, what's the question? What was the question? Do I believe in Giga Thailand? No, I don't.
If you had any thoughts on it, basically you gave your thoughts, which is true. What the news was that an official from the Prime Minister's office said that they're in talks with with Tesla, and that they gave Tesla a 100% green energy, policy to run the facility to produce EVs or batteries. So, and then they've already, I think they said here that they've already done. I'm just trying to look for the news here that they'd already done a site survey late last year. But yeah, you're right. It's just yet another thing. We've been hearing rumors about these things. Typically, though, the rumors fly and then some fall. They don't happen. But then normally a rumor flies and then it does happen, right? Because that is, there's usually a fire when you see smoke, right? That's happened. So eventually it'll fall. Okay, so that's Giga Thailand. And talking about fire, there was an actual arson in Berlin, and this is a fact that happened last night. It was an evacuated arson attack to a transformer station near the factory. It's apparently, I think the government themselves has announced that it's the eco-activist explosive ordinance, and so they didn't know whether or not there was still a bomb inside the factory, so they're doing that. And I think they're all just trying to work out to see how long will it be down until the transformer is replaced. So far, most reports are thinking this is not going to be too long, but we don't know. We have no idea how long this might be.
Yeah, I mean the whole activism. I mean if you support Tesla, if you drive a Tesla, or you Powerwall products, energy products, you tend to kind of believe in energy and sustainable energy. So I don't know. It just seems like brain cells are on the decline in terms of some of these activist groups. And like, why would you take probably the most consequential and important company on earth and start burning their assets? I mean, it's a great question for them, but I mean, we're not dealing with level-headed, linear thinking either. It's unfortunate. I think tactically, they've got to figure out, like, can they source these parts and get this, up and going again? And what's the timeline for that? I don't know what the extent of the damage is. I don't know. I know there was an evacuation, but in terms of, like, I don't know what it means to production. I know some of these things are not in, ready supply in terms of being able to just like go to the store and buy another one, or go to a vendor and get another one right away. So it depends. They have to assess the damage and figure out what the timeline is for recovery.
Yeah, and without the risk of stating the obvious, like there's no place for that in the world. Hitting any business like that or trying any type of terrorism any is over the edge. But if this is an eco-friendly and you're going after Tesla, which is probably doing the most for the environment than any company in the world, it's stupid squared. Yeah.
Okay. And then the other bit of news here is Nissan is apparently in advanced talks to invest in Fisker. So Fisker obviously is in trouble. They're looking to strike a deal, and then Nissan themselves is looking to, get access to an electric pickup truck. And so they're kind of, two dogs helping each other out, I guess, trying to help each other. Anybody have any thoughts on that?
I think the only thing I'll say quickly is you're going to see a lot of like legacy lifelines reaching out to these companies, because the legacy auto companies are lost. They don't know. They can't go to the drawing board and draw up the unit economics and draw up the vehicle that's going to sell at the right volume that fits into their business model that allows them to make money. Like they don't have all the EV transition took tremendous planning and execution on the part of Tesla. They had to build a charging infrastructure, and they had to refine the unit economics on that to make that a viable business. They had to build a battery business, a joint venture, starting with a joint venture. Their joint venture started 7-8 years ago, maybe longer, 9 years ago with Panasonic, and you see GM and Ford are just starting. Ford hasn't even built a joint venture battery yet, and GM it's just in their first year of doing it with LG, with Ultium. So they're in year one, and Tesla's 8, 9, 10 years into it. So transitioning to EV takes tremendous planning, tremendous execution, tremendous risk. And Tesla's done a lot of the heavy lifting already, and they're on to kind of their second, third, and fourth generation of both vehicles, or working on various new motors, or the 4680 and so forth. So they're these legacy companies they're casting a line. Look what GM did. That GM leadership team and board, in a year's time frame, signed up Nikola to a multi-billion-dollar contract. They signed up Lordstown Motors, and of course, with Cruise, which it's not clear that they can make that into. Forget about just having the cars be safe enough to be on the road. There's no. It was losing over $1 billion. In a 6-month time frame, was losing north of that. So these companies are just casting like one lifeline after another, and if you go back and look, they didn't really do the planning to where the industry would be. And right now, the industry is 20% EV globally, and that could easily jump and hop to 30% for not too long. That's why they all still have their foot in the water, and they're still trying to figure this out. But in reality, they've got a couple of years of basically kind of not even treading water. They're below water until they can figure out how to get something out can eventually turn contribution margin positive. But I think, in short, that wasn't a short summary. I think they're going to try to partner together to try to figure this out together, and this is why you're seeing stuff like this. But I wouldn't partner with Fisker.
Yeah, I was going to ask you this question, Jeff. So there was this great Morgan Stanley report one time, and they said that this is the typical pattern of what will happen. The first thing is the legacy auto will try to do it themselves. And when they fail and can't do it, then they will form a consortium with each other, and they'll all try to join each other, investing it together. When they can't do that, then they'll invest in a Chinese company or something like that. And then the fourth thing would be eventually they're going to partner with Tesla. That's what they were thinking. What's your thinking about that?
The same thing happened in the mobile phone industry. Ericsson went out for partnerships. They were a behemoth. Nokia went out for partnerships. They were a behemoth. Motorola was eventually acquired by Lenovo, was acquired by Google, then Lenovo. They were, behemoth. They're still a big player in terms of global sales. And because, in the end, BlackBerry just, basically got out of the hardware business altogether. And what you had is you kind of had a similar thing happening. You had the rise of the Chinese handset vendors who basically soaked up all the China volume, which was where a ton of the growth was. They soaked up a bunch of European volume, and they started invading South America. And look at what they're trying to do right now with auto. It's actually following a bit of a similar course, although I don't think that they're going to have the same kind of success, because you really need local content to be able to compete in these geographies. And I don't think the U.S. is going to allow it. But yeah, I think Morgan Stanley's right, and there's an industry to kind of pattern this off of, and it was the mobile phone industry. First reached out for partnerships, then there's a bunch of acquisitions and a bunch of basically paring down the industry. The Chinese handset vendors elevated. You still had that Apple and in Samsung. You still had a one or two kind of dominant players taking most of the profit, the margin share in the industry. And that's what may happen in auto. What may happen in auto is Tesla has moved way ahead of any of these other competitors in terms of software as a real service, as a meaningful service for consumers. So they may go in and take a ton of that margin share. And like Apple, they've got the ability to throw off probably the best hardware margins available in EV today.
I love that, Jeff. Hey, Herbert, I just wanted to ask a quick question, and this is just for me. Like, I think it's just good to, like, even from when you're a bull and you're like 100% convinced with the story, I still think it's good. Like, and Jeff, I would love to hear you and Herbert. So I just ask a question. So, what is your number one? What is the number one thing you think that would derail the Tesla story? So, like, so you're an investor, you're thinking long term. What is there one? And this is just so it helps me to think about it. Is it FSD not working? It's just too hard a problem, and it doesn't like get solved over the next like 3 to 5 years. Is it, you think? I'm just making up stuff. You could tell me what you think. Is it demand for Teslas aren't as strong as you thought? Like, what is your guys like number one or number two, like big points that if you don't see it, it would kind of maybe shake you in the story a little bit? So I don't know, just an honest, fair question.
Yeah, let me start. So I think, so first of all, the examples you gave is actually not the right ones for me, right? Because I'm prepared that one of these ideas, these business units that they've done, will be a failure. What I'm looking at is the business and the products and the markets that they're addressing. So if you look at the team, the executive team, you look at all the choices you can have, all the businesses that you can invest in, who has the most strongest team that delivers and that you believe is innovative. And that's why I've invested in Apple for many years, because I felt like they were the strongest, right? Lots of companies fit that thing. Then they have to have a market that they're addressing that is massive. So there's a potential for this company to really, really succeed and grow big time. This isn't a small potatoes. Then they have products that are able to be delivered that are just best in class. So all of this is true. Now, I want to invest in a company that's an innovation engine. These guys continue to build, and that's why they roll out FSD. 2 years, 3 years ago, we didn't know that they were going to get into humanoid bots. They obviously launched energy many years ago, and then they're going to be now into AI. And then in a couple of years, they'll announce yet another thing, probably HVAC or home products or some other big giant market that we haven't even thought of. And so if that's what I'm looking at, rate of innovation. If this company continues to produce products that are best in class, then eventually the stock will follow, the sales will happen, the earnings will grow, and you'll get into grow. You will one day tell me, Christian, that there is no other company out there in the world that can have the earnings potential, the earnings growth that Tesla has. And I can, with a straight face, tell you that Tesla has that chance to be one of the top companies. It may not be number one, maybe it's number 5, but it doesn't matter. It's like one company that's going to have the largest earnings per year. And I can kind of map it out. And if one of these don't work out, that's okay. That is part and parcel of why I'm willing to wait. And so what would I need to see? I need to see a decline in innovation, the rate of innovation, and decline in best-in-class products. If they aren't able to produce products at that level, like I felt like Apple was heading in that direction a couple of years ago, and I divested of Apple. Apple still grew and still going to continue to grow, and it's still double, and it'll be a great company for a long time. I'm not saying it's a terrible company. I'm just like, I'm looking for the company that has the most chance to innovate and create really good products. And then, stock will follow.
Very nice, Herbert. Yeah, I don't know if Jeff, if you care to any worries, short or near term, that that you think about that as a possible issue, or I don't know.
Yeah, I think there's some risk and destabilization of China first, like economically, and then second, like militarily. But I think Tesla's done a very good job of, when I study their supply chain, they've done a very good job of localizing their supply chain. So like Shanghai sources out of Shanghai, and like 95% of the parts are locally sourced. And the US also does, they basically, when they set up their factories, to do local sourcing. So if we did run into a problem with China, trust me, there would be some near-term impact. But the company that would be able to climb out of it, most quickly would be Tesla, in my opinion, just given how they've designed their supply chains. But I do worry about China, both economically, and I worry about them militarily. That to me could derail the story. And then, if they run into some new problem with FSD, it looks like they've unlike going from version 9 to 10 and 10 to 11, it looks like they've made a considerable, like, quantifiable jump. I don't know how to quantify it yet, because it's still in early goings. But FSD execution, there's a risk in that. But if they can ship anywhere from 5 to 7 million cars a year and get a portfolio of products that could support that, I don't think 5 million cars a year is a huge stretch when you start factoring in the compact model. And I still think you've got a very viable business there. And then you have it with energy as well. I still think you have a very viable business then bought. So what Tesla's done for me in the last couple of years is they've really kind of de-risked the story. They put more of the weighting on their software solutions, but they've also developed, more business categories that are more meaningful. So it's kind of a mixed bag. It's like they've increased risk in some other areas, but they've also de-risked in a lot of areas. But to me, China near term would be the one that could derail it.
Good answers, both of you. Very good answers.
What about the opposite, Christian? What do you need to see for you to go all in? I'm not going to ask you to go all in.
No, I'm not all. Yeah.
Yeah.
That's a great.
Obviously,
Yeah,
it's earnings, right? You are earnings. If you saw that and you multiply times the PE ratio, then that's what I'm going to start buying.
Well,
right?
That's a little simplistic. I do a little bit more than that, Herbert. So what would make me a bull again? And it's not that I'm bearish on Tesla. Again, I own Tesla from 2019 and a huge portion of it into, near the highs. Didn't time it perfect. But what I'm saying is I've just seen personally other investments, and it's just proved to happen, that have just done better. I'm not saying for why or for what reasons, they just have. And in my mind, that Tesla would struggle. Now, it doesn't mean Tesla struggles forever. So you're right. There is definitely going to be a point in time, and that's okay, where I could get very bullish. I guess what I need to see is a little bit of change in the growth trajectory. I need to see a little bit. This is just me. Again, if you're at Tesla all in and everything is great, don't listen to me. But if you're just a regular person and you're thinking about it, this is just what I'm thinking about. I need a little bit of a change in the growth. I need to get some growth back. Like I used to call it, Herbert, on our earlier Cyber Bulls when we did this a few years, a growth machine. You're right. I need some growth, revenue growth, to be fair. Again, I know we're talking in one, revenue growth is not going to grow that much this year. I think revenue growth from last year in Q4 was 1%, plus 1% growth, revenue growth. Revenue growth for a growth company was plus 1%, because they cut price so much on the cars. Even though they sold more units, revenue was flat. And so, I need to see some revenue acceleration again. And I don't know exactly when we're going to get that. I don't think we're going to get it this year, because I don't think units are going to grow that much. And I don't think they're going to do price increases too much. So I guess, long story short, I just need the growth story needs to come back to me a little bit. So maybe it is seeing an energy print and it does, something. And I'm like, wow, they are really, growing that business. And I know they're growing it, but something really tangible where it's really making an impact. And I guess just to see, because I'm a little surprised. I don't know about you guys. I thought I made a mistake. I was wrong. I thought the 7,500 EV tax credit in the United States, and maybe that will show up later in the year, would be a bigger driver. I thought, Model Ys would and Model 3s. I thought like a year ago when I was big into Tesla, I thought Austin would be ramped way more than it is now. I thought Berlin would be ramped way more than it is now. I made a mistake. I thought growth would be way more than it is now. So I had it all wrong. I had the growth story remaining. I thought they were going to be able to sell units and not reduce price to move units. I had that wrong. So there's a lot of things I had wrong with Tesla that I got wrong. I thought growth would hang in there, and I thought profits would hang in there, and I was wrong. Profits have come way more in than I thought, and growth has slowed down way more than I anticipated. So I guess just a clean answer would be, other than some obvious stuff, FSD breakthrough, and it's a miracle just occurred, and the car just drives perfect. Like, something like that, or humanoid is just, we see a video that just blows our minds out. We're like, we got to own this stuff, sort of something like short of that. I just need the business to start executing better and growing more, quickly. Like so, and then maybe interest rates is a key to that. Maybe with the interest rate reduction, maybe with Tesla. More people becoming aware of the 7,500 credit later in the year, that it's a point of sale credit. Maybe that could spur some growth. Maybe the new Model 3, once they get all that settled out, that'll be a big car. Because I always thought Model 3 should sell great, but to me, it's just not translating like the way I thought. So long story short, I had it wrong. I thought they would be more of a growth machine. I thought the earnings would be hold on a little bit better. So I don't know. That's my quick thoughts.
Yeah, we had the macro economy. That's what happened. And then look, we just lost somebody that we asked to come up. So yeah, that's what happened, and we were all wrong, right? Because we all thought this was going to keep going up, and it didn't happen because things happen. And so that's the other reason I invest in Tesla, though. Is like, you look at these companies, and when they get hit, I mean, this is a very strong balance sheet, strong team, and you can still see the incredible accomplishments they're still able to do in a tough environment. So if they cut prices, so your margins fell from 30 to 18, 17, and we're complaining because the stock fell, it's 17%. It's a profitable company in a car business. Look at all these other car companies that are just about to die because they can't turn it around. No other EV company, except for maybe BYD, has able to show that they are able to make profit in this area. So you got to say 17%, great. Why are we upset with that? And they were able to do. If they decide to do another price cut, are you going to react? Because what's going to happen to the market if they decide to do a price cut, right? They could, if they wanted to, basically eat up the entire market if they really wanted to do a price war. I just did an interview with Michael Dunn, and he believes that that's what they're going to do. The more price war here in the U.S. Now, I don't know if they will, because obviously they still, they have a target of 20% margin. That, at least that was the previous CFO had said that. I don't think they will do that, but if they wanted to, if they needed to, they can do this, right?
Yeah, I agree with you. I think if they did another price cut, it's not a big deal that they've done so many. I mean, the stock price might have a short little blip on it, but I think, we went from the volume over pricing strategy, right? And they've done it, but I don't know. To be fair, I don't know. I don't know. I'd love to get Jeff's take on this. Jeff, do you think that strategy? And I'm just, this is a little bit Monday morning quarterback, or it's kind of rear view. But do you think that strategy has really done what it was supposed to do by dropping the price? Did you think? And again, this is just in your opinion. Did you think demand would be? And I think you said a little bit. You're a little surprised that the 7,500 credit hasn't spurred a little bit more demand. Do you think? I don't know. Is it awareness? Is it middle America doesn't know about the product? Because I'm still really struggling, because there's great value in that car. I don't know exactly. Range anxiety, I hear, is a problem. What do you think is stopping? Because I think this is a fundamental thing to Tesla, like, short term, over the next 12 months. Why are not more people like gravitating to this great product? Because the prices come down so much, and we know people love value for money. There's something there that I'm not seeing that's preventing people from buying this in droves. I don't know if you want to shed some light or what your thoughts are on it.
I mean, the only thing I'll say is, the point of sale credit is new. I think it went into effect the third week of January, and we're in the first week of March. So I don't know. I don't know how much I buy all of this, intra-quarter tracking. All of these inventory charts I see are like made up from I don't know what they're based off of. They're not from the company. They've never proven to be true. So I don't know. to be honest with you. I just know, like, if there seems to be a problem with getting supply for long range Model 3s, and if they got supply for them, it seems like they would have a fairly, decent quarter on their hands. But in terms of, like, why didn't volumes go from 480 to, I don't know, 520 or something this quarter? I think there's pressure on the consumer. I think Tesla doesn't have supply of the new vehicle, so meaning there's no supply of the old Model 3 as well. There are very little inventory units that they can move through. So, I mean, I think that's a real issue. And then, but I don't know what I mean. The only other thing is, like, is there an awareness issue? Again, like I tweeted about or posted about, the 4 people in my family, all of them want to buy EVs. All of them thought Teslas were, north of 50 to 60K, and they didn't think there were any options at 30K. So is there an awareness issue where you've kind of gone through some of the word of mouth people, and you're just like, what got you to this point? Like, what got you to a 2 million run rate may not get you to a 2.5 or 3 million run rate without doing some different things. So I don't know. I can't put my finger on it. All I know is, like, I was calling this year at somewhere between 2.2 to 2.4, and I don't know. I mean, could they do 2 million? I think we all just said 50-50. So, I mean, to me, I feel like we're within 10% of what we thought it would be. And macro, we're now into the second full year now. We're actually into our first full year of 5.5% Fed funds rate. So, I mean, that has a bearing on consumers. I have friends that literally went out to get loans for cars, and they're somewhere between 8 and 10%. Loans to get a car, and that used to be 3% or 0, a year or two ago. So that has to have some factor. People being rejected for loans are at an all-time high. So I think all these things have a somewhat of a cumulative effect. And I think Tesla needs a vehicle in the sub $30,000 slot. And while they've made great moves on pricing, I do think that's helped. I think that's helped shore up their supply base. It's helped shore up their own utilization to keep it. If you look at legacy auto utilization rates, they're in the 30s and 40 percentiles in their factories, which means they're big time. They're under big time margin pressure. They're under big time constraints, and that's why you see a lot of these facilities shutting down. You see a lot of layoffs happening. So I don't think there's one silver bullet type answer, but I do think they need to get to the compact. They need to ramp the Cybertruck that people want, and it looks like people want the Model 3 refresh. They need to get those two things ramped. That right there could be, a couple $100,000 vehicle, couple 100,000 unit vehicle difference if executed properly.
Thanks, Jeff.
Yep.
Okay, let's have Tanvi up. Tanvir.
Hey, thank you, Herbert. I really wanted to. I just wanted to give answer some of the questions that Christian asked. Why people are not buying? I was telling you, it's like that just said, right? 3 of my family members are looking to buy a car. The interest rate outside is like 11% on each of them, each of the person. And if some of the people want to buy cash, but the opportunity to buy the stock is more than buying the car. So it's just delayed because of the situation that we are in the stock, and as well as the interest rate. And personally, I just wanted to
Interesting.
I just wanted to say, because so one of the things that Rohan mentioned with the lease of the Model 3 is so low. I responded to him saying, if Tesla could, Model 3 is such a good car that everybody who drives it wants to buy it, but since there's no $7,500 credit on it, if Tesla could somehow allow the lease to be the buyer, the lease, he could acquire the car after the end of the lease, would be awesome. People could take advantage of the $7,500, lease it now, and then acquire it at the end, which it's not a Tesla's policy, but I'm saying that's one of the way that probably everybody wants to take advantage of the new car, new features, but the lease doesn't allow you to like they own the car at the end.
Yeah, that's a good point. A lot of people talk around this.
Yeah.
And it's a real problem. You say, oh yeah, there's a $7,500 credit. You just you have to lease it. But yeah, if you don't own the car 2 or 3 years after doing that, a lot of people don't want to just lease to give the car back. They want to.
But Jeff, that's a great point by Tanvir. Like, you can get the 7,500 credit if you lease, and I know Tesla, I guess, doesn't let you buy it back, but most cars do. Like, when I leased cars, you had a residual value. You had a value that you could own the car outright at the end. You could buy it. Like, if Tesla changed that policy, you could get the 7,500 credit, and then at the end, you could buy it off lease or something like that. I don't know. That's an interesting idea. I mean, maybe it doesn't move the needle, but I think that could entice some people. I don't know.
Well, right now they can't make the car, so they got to figure out how to make it in volume, and then they should probably open that up.
Thank you, Herbert. That's just I wanted to add. It's like knowing personally how people in my family are looking at the opportunity to own the stock just versus buying the car is just like past right now. I just want to share that info.
Yeah, that's a good point, because obviously Elon has been saying that it's all about the interest rates, and then you hear a lot of people saying that they can't understand, that Elon's just using that as an excuse. The interest rates, like, what is it, Jeff? 75% of buyers do a lease. It's probably even higher, right? Almost 80% buy finance, right? And so if it's like 6% or higher, and your interest rates, and you're paying $800 to $1,000 a month, that's out of reach for people.
I also wanted to share one more info. In 2022, not 2023, 2022, when I was looking personally for buying a car, I was looking for a Model Y, which was $63,000 at that time, and there was wait time was 4 months. The interest rate was the same. I had cash which I wanted to buy Tesla, but instead of that, I went and bought Honda because I was getting 0% interest on Honda, and I took the money and put it in the stock. The money in the stock is down, but I'm happy that car value also dropped by $22,000. Now, actually $30,000 now, if you look at it. You know what I mean? So I think people do look at multiple options, and I think it's a challenge for right now to just by the interest rate. And Elon is right. The interest rate is so high. People have other options, and I'm a realtor. It's the same experience that we are having in the home purchases as well. The home is like 7.75. People hesitate right now, and with the fear that people are could lose jobs, everybody is hesitant. Like, even if one family member could be iffy, that they want to hold off right now. So it's like macro is definitely playing a role here.
Thank you so much, Tanvir. Okay, thank you, everybody. That was a great discussion. Appreciate you, Christian, Jeff, and Tanvir, and Larry joined us as well. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.